only seeing some single-digit percentage moves in the biggest names. And the end of trading Friday, and at the end of trading Friday, AMC was up 80% on the week. Join us now to talk about the springtime return of the retail investor crowd is Thomas Petterfeet, founder and chairman of Interactive Brokers. Do you welcome what we've seen on the retail side of things? Thomas, we've gone back and forth with a lot of different people on this, the democratization of stock investing or the gamification of stock investing.
Well, I worry about my customers, those of them who are long these stocks. But of course, Interactive Brokers customers tend to be financially more sophisticated. So, of the 1.4 million customers we have, their average account size is about $250,000. So, less than 2% of our customers are involved in these meme stocks. So as long the longs on the average have about $50,000 to $100,000 invested in these stocks, and the shorts have about twice as much. But of course, both sides probably start at much lower levels. So I just want to make sure that people always understand that the accounts must be margin compliant at all times, and if they are not, we will take immediate action and liquidate the positions up until the account becomes margin compliant. So, the fact is that on the long term, stocks always approach their fundamental values, which in these cases is much, much lower. So while it is extremely tempting to short these stocks, but unless you have huge liquid resources, please try to resist the temptation because these prices can go to unimaginable heights before they settle down to a reasonable valuation, and you may have to cover on the high point, and if you do not have enough money to shoulder the margin calls.
Thomas, I might be offended, I think, if I were a Reddit trader or one of the... So you're saying you have sophisticated investors. They have more money than the average investor, I guess $250,000, but only 2% are playing in the meme arena. That sounds like you're saying that consists mostly of unsophisticated traders. Was that your intention to imply that?
Well, look, I mean, no, the shorts are certainly, I would think, are the more sophisticated ones than the longs. But look, I mean, eventually these stocks will go back to their value, which is roughly maybe single-digit dollars, if even that. And so on the long run, the longs will lose their money. So while you may try to catch a sudden drift upward as a trader, I would recommend against being on these stocks.
All right, so I'll just mention one thing, and that is this piece in the Journal today that, we use the term diamond hands all the time, and they talk about one GameStop loyalist. I mean, he bought on the highs, $349 a share, right? Well, like way back in January. Then when it went all the way down, he bought on the way down as well and held it all the way to where it's back up here. These people, at least at this point, may never sell, Thomas. So how do these stocks ever get back? It could take much longer, in other words, to get back to what you see as the fundamental value that stocks eventually return to. But I mean, it's a whole new dynamic, the way that the buy and hold is going with some of the...
Yes, but I mean, if you're willing to sit there and hold a stock at $200, $300, $400 a share that keeps making no money, I mean, eventually, these companies can't. It's impossible that these prices can hold up at that level because more and more people will short them.
Hey, Thomas, it's trending this morning, the phrase naked shorts. And there's lots of questions in the market, especially among the AMC apes and a lot of the Reddit meme traders who believe that the system is being manipulated by professionals and that these short sales are not actually real sales, but in fact that they are naked shorts insofar as there's not actual stock behind it. Do you believe there is or isn't?
No, that is impossible. These rules are incredibly strongly enforced by the SEC. You cannot sell short. The broker has to be absolutely certain that you have the stock borrowed before he lets you short the stock.
So, but when you see
the penalties are severe on this against brokers who would allow customers to sell stock which they have not borrowed.
So tell them, the meme traders out there, if that's what you believe, when they see the number of outstanding shorts effectively against a company, in some cases in excess of the full number of shares that even exist, they say, on a percentage basis, they say there's something wrong with the system. How is that possible then? I think I know the answer, but maybe you can help explain it.
Well, it's very simple. So if you buy a stock on margin, the broker is entitled to lending out your stock. So you buy the stock on margin, the broker takes the stock you just bought and lends it to somebody who will sell it short. Somebody else buys it on margin, and it just goes round and around and around and around. So the position can build up. Now, what the loans do not understand is that when a stock is really at a very, very high level in price, then instead of buying more, they should sell off some if they really want to squeeze the market and wipe out their margin loans, in which case the broker must record the short stock. And that means that the short has to buy in the stock, and that's what pushes up the stock.
Hey, Thomas, just while I have you here, I have no idea how you feel about this, but you are always an outspoken sort of proponent of the American system and free markets and just liberty in general coming from Hungary. So just wondering what you think of, should we have a global tax system? Just everybody should have the same 15%? Is that what, that was like an idea back in Hungary back in the 60s, wasn't it? That was a pretty good idea, that kind of globalization. Do you think this is a good idea for the United States? Was that part of the idea back then too, or no?
I'm generally in favor of everybody paying their taxes and not